Welcome back to our somewhat special State of the Economy. I have been speaking with Dr. Ashima Goyal, Yamini Aiyar, Pranjul Bhandari and Upasana Chachra. Ladies, thank you very much for your patience. Dr. Goyal, to you, the MPC's given mandate is inflation, and one can see that concentration of the external members of the MPC on their inflation mandate. But, the recent events in the UK and before that show us that financial instability can come in various ways. And the Bank of England had to change its monetary policy track and, step in to provide stability. Do you think that there will be those contexts as well, that the Reserve Bank will be forced to use the monetary policy Brahmastra for external stability?
I think that in India, we've gone through periods of very large surplus liquidity and a period of extreme liquidity tightening prior to that, with the NBFC crisis and so on. And we've seen that there are financial stability issues in both. So, my stance, for example, it is about maintaining adequate liquidity. So once you do that, I think this QT as a whole, as long as it progresses very slowly and specific frictions in the financial sector are taken care of, that is the best way to minimize possible crises. But, the other risks facing India, from where are these crises going to materialize? Because our financial sector is somewhat robust. It's just been through a deleveraging, capital adequacy is good. We don't have as much growth of shadow banks. Our shadow bank sector tends to be much more tightly regulated than it is outside, where all the regulation focused in advanced economies, where all the regulation focused on banks. So the crises are erupting in the shadow bank sector. So even though overall there is QT and inflows recede, I think India will attract a larger share of inflows. Yeah, so those risks are somewhat moderate. And India, being a diverse country, we've always followed a sort of middling through policy approach. And I think that is what is required under today's risks. So we start with decreasing demand somewhat, keeping real rates positive, and letting some adjustment come from the exchange rate, some from financing, some from encouraging exports, some from, moderating imports, and then you will do much better. Instead of, I think other countries should take this lesson also.
No, I take your point. I take your point. You've handled this very well. But Pranjul, how seriously are you looking at the balance of payments problem? If our exports are slowing before our imports slow, because of the nature of our imports. I mean, they're more indispensable, they're crude and such type. Do you think there's going to be, if you were to tell our viewers how the rupee is going to perform in the coming year, give them an idea. That's very stock market important.
Right. Thanks, Lata. Our current account deficit is likely to be around 5% of GDP in the September quarter. The sustainable levels are about 2.5% of GDP. So I think there's a challenge right now to halve the current account deficit in order to maintain macro stability in the economy. And I think that should be the focus at this point. Now, why has the current account deficit, widened so much? There's an external angle for sure, but there's also a domestic angle, which is that savings have really fallen. The fact that, government saving is high right now, the fact that once the lockdowns ended, households began to start spending and all that money kept in banks has begun to fall. The deposit upon GDP, number has been falling over the last couple of quarters. And basically savings are actually in a way much weaker today than they were at pre-pandemic levels. I think that is at the heart of the current account deficit rising. What do? I think a two-pronged strategy of raising rates and letting the rupee depreciate will really help here. When we raise rates, it incentivizes savings. When we depreciate the rupee, it disincentivizes sort of import spending.
Pranjul, I get the overall point, and I'm sorry to hurry you because we have a time limit on the show. But what's your rupee range at all? Do you think it goes to 83 and beyond in the coming samvat?
And I think this is a good thing, as in this kind of depreciation is good for also keeping your exports competitive.
Upasana, both those numbers too, I couldn't do justice to the inflation argument, but what do you see as the peak rate for repo, and what do you see as the peak rate for the currency exchange rate in samvats 2017 and 18?
Sure. So our view has been that terminal repo rate peaks at around 6.5%. Bulk of the tightening is behind us. So we expect another 2 rate hikes in December and Feb, and closing the peak rate at 6.5, and thereafter a long pause. In terms of why we think peak at 6.5, just very briefly, we think that inflation would be close to 5.5% by the second half of next year, and so we are working with a positive real rate of about 1% over this cycle, which we think will be appropriate for growth and inflation and managing the macro stability. On rupee, yes, it is going to be tightly linked to dollar. Our global team expects dollar to peak in this quarter, but thereafter to remain a bit muddled through. So for dollar to peak, you need two things. One is the Fed hawkishness peaks, which probably happens in the near term, and also the rest of the world to improve, which is where the doubt is, given what we are seeing in Euro area and China. So I think that is where the dollar call becomes a little muddled through, and we therefore expect rupee to depreciate to around 83.5 in this quarter. But as the team expects dollar to gain to weaken, the rupee would gain somewhat in the next year.
Okay, so 83.5, and Pranjul, of course, going up to 84.5. Ashima was listening to your repo rate forecast with an absolute deadpan face. No expression. She's just not betraying anything. Yamini, actually, I have a big question, and I'm short on time. We are living in a geopolitically charged up atmosphere. Xi Jinping saying that, force on Taiwan is not ruled out. So defense could take a large part of the budget, or a slightly larger part of the budget, you think? That's one question very quickly. And the second question, we are very clearly back into industrial policy 2.0. Everywhere governments, the US government is driving manufacture of semiconductors. We are doing a PLI. Indonesia is doing something like a PLI. So, just some broad parameters on what the government should keep in mind as we get into industrial policy mode. How should they encourage this PLI a good idea?
Well,
sorry.
Big questions, short timing.
Yeah.
So let me say very quickly, I think there's no question that defense spending is going to put new pressures on how we balance our books. And this has been an ongoing challenge with the OROP, the whole issue of defense pensions, and we saw some tensions and contestations when the Agnipath scheme was announced. The 15th Finance Commission has articulated some possibilities, including types of asset monetization as ways to create a fund for defense expenditures. Perhaps it's time to look for the defense authorities to look at this a little bit more carefully and see how to balance, because of all the factors you are raising, including the fact that governments are now across the globe, and with climate pressures in India too, along with the need for addressing manufacturing and jobs, beginning to drive and subsidize a lot more of industrial policy.
Sure.
I will just say on this, you can't have an industrial policy without a proper, articulated, whole of government planned approach. We've given up on planning. I'm not asking for going back to centralized planning. We have goals like 5 trillion economy, but we don't have frameworks to articulate ways forward. I think a whole of government approach to build that is absolutely necessary. Perhaps Niti Aayog can take the lead, but without that, we will only see piecemeal attempts at addressing the very real challenges that the Indian economy confronts, and fiscal questions will not be addressed without a good midterm fiscal framework. No midterm fiscal framework will exist without a broad strategy and plan for how we intend to achieve 5 trillion. So Government of India needs to do a lot of serious planning along with year-on-year budgeting and balancing of books. It's a big challenge, but one that the government should take on head-on.
I challenged you with a very big question and very little time, but you've done more than justice to it. Thank you very much, Yamini, Ashima Goyal, Upasana, and Pranjul Bhandari, for enlightening us as to what we may expect in terms of Samvat 2079-80. Have a great one, all of you.